not what we just got blessed with. And I don't think it's much of a blessing. It's actually pretty damn bad. The only thing that's a blessing is that the coupon code expires tonight, and you still have time to use coupon code release the files. But here's the scoop. We already know the headline. We were expecting 103, 104,000, depending on how you round and what the survey is. We got 73. Which is weak, but it's only weak by one standard deviation. But that wasn't the kiss of death. That wasn't the shocker. That wasn't what made us go, what the hell? It was the revisions. We lost 258,000 jobs in May and June. Gone. Evaporated. Last month, we were talking about the June report. Oh, strong report, 147,000 jobs. But when we looked at the details, you remember, because you watched this channel, you remember me saying, just be careful. Only 14,000 private payroll jobs were created last month. 14,000 were created, and we knew that last month out of that 147. That's because we had a big number on government and healthcare and some of these other sectors. Only 14,000 private payroll jobs last month outside of those sectors, government and healthcare. Well, now we literally revised the entire report down to 14,000 for last month. Over the last 2 months, we had negative 258,000 jobs and revisions. And this comes before the quarterly revisions via the QCEW, which usually take off even more jobs. We are now at the slowest pace of job gains since last August, which was right before the September meeting where the Federal Reserve cut rates 50 basis points. We might now be setting up for a 50 basis point cut this September. That'll be a game changer for House Act fundraising, because we'll probably end that much sooner than we thought. And we'll have to talk to the board about it. But anyway, remember, if you want to invest, go to househack.com, read the solicitation. The private sector added just 52,000 jobs on average over the last 3 months. Over the last 6 months, JPow's been bragging about how the 3-month average gains in jobs has been really great in the mid 150,000 range. Now it's just 52K on average over the last 3 months. In August of 2024, we were at 46,000, and then we panic cut 50 basis points. We're literally repeating what happened last year. The unemployment rate moved up to 4.248%, which initially looked like we just went up 1/10 of a basis point, of 1/10 of a percent rather, about 10 bips. But we actually moved up more than that. We moved up to basically 4.25, and that's with labor force participation falling. So maybe this is why JPow gave us that warning, hey, pay attention to the unemployment rate. That's what we're going to be looking at, because the unemployment rate just moved up, while at the same time the participation rate is falling, which is really weird. The participation rate is either plummeting, which you can see right here, from 62.7 last year to 62.4 in May to 62.3 in June to 62.2 in July. This is either happening because of the ICE raids and people are wanting to stay home, or this is people are literally just getting squeezed out of the labor market because the labor market is not doing so well. Now, a weird thing that happens when the participation rate falls, you actually mask a higher unemployment rate. If the participation rate were the same rate and more people were unemployed, the unemployment rate would be skyrocketing right now. So the only reason it's not skyrocketing is because of that participation rate falling. This is where JPow kind of gave us this, hey, there's less hiring, but there are also fewer people in the labor force. So does that balance out? We don't know. He kind of was giving us a hint of this report coming, but these revisions were way nastier than anybody expected. And so as a result, we now see the 10-2 spread back to 49, almost 0.50, shock level. We actually, looks like hit 0.50 right here. And this is despite things chilling out over the last 2 weeks. People were very comfortable. Hey, the economy's doing better. Things are doing good. But this is starting to be an indicator that we're getting real cracks now in the labor market, which is the last leg holding this economy up. Frankly, if you really want to know what the real last leg is that's holding the economy up, it's the lack of layoffs that we're seeing. Once we start seeing layoffs, it's over. We're in a deep, dark recession that could take a long time to get out of, because AI is going to keep the boot on this labor market. And it's going to, I'm not trying to bear, I'm trying to just give you a very realistic heads up. We're at the top of the market right now, okay? I'm not here to be a bear. I'm just here to say Oh, here it is. Look, the QCEW comes out September 9th. See, preliminary benchmark revision to establishment data comes out September 9th. So we're still a month away from the QCEW revisions. Yeah, and we got a negative 258 now. That's insane. You can see the 258 right here, which is crazy. But anyway, add layoffs to this. If it starts becoming socially acceptable for companies to lay off, rates are going to plummet. But that's not going to save the day. Yes, currently the stock market and futures are pricing in now it keeps going up. We are now pricing in an 85.5% chance of a cut in September and a 50% chance of a second cut in October. We are now fully pricing in 2 rate cuts for the year. This was a game changer jobs report. Holy smokes, man. Without healthcare, the last 3 months of payroll would be negative 53,000, negative 45,000, negative 300. We should have cut. This is why I'm kind of surprised JPOW was so hawkish. It sounds like he knew some of these components. I don't know if he knew these revisions, but man. Government payroll now down 6 straight months. Odds of a September rate cut now again. They just revised again. Yeah, 86.5%. Okay, that's just a flash up. 86.5% now. That was from the mid-40s after Powell's hawking just 2 days ago. But this is actually a sign that Powell is indeed earning his nickname, Mr. Too Late. Nick T tweeted that Bowman this morning told us that, here it is. Bowman explains her dissent in favor of a rate cut. Economic conditions are shifting. I see the risk that a delay in action could result in a deterioration in the labor market and a further slowing in economic growth. Taking a proactive approach and moving closer to neutral would avoid an unnecessary erosion of the labor market. Remember, folks, rate cuts don't stop job cuts. Rate cuts don't do it. Money printing does. But we're far ways out from the money printer. And so we really got to hope that this shock of a payrolls report isn't the beginning of a layoff cycle, because it just forecasts hell. Anyway, now we're going to jump on over to the course member live stream. We're going to do our alpha report together. We're going to talk about what the play is, the trades, the lines, because this is a crazy, shocking jobs report. We got to get into the details of it. So with that said, thanks so much for watching. We'll see you. We'll be over at the course member stream in about 2 minutes.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
So much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
You're actually not lazy. You're just tired of doing everything alone. You know the feeling, the quiet sting when someone asks, so how's your business? You've read the playbooks, watched the gurus, and pulled the late nights, and still wake up buried under tasks. Here's what finally clicked. I wasn't lazy, I was just outgunned. When I swung my butter knife, my competitors rolled in AI armies, so I hired one of my own. Now an AI employee handles an inbox, the follow-ups, the shifting deadlines, all day, every day, without breaking a sweat. Now when people ask me about how my business is doing, I don't even flinch. I answer with numbers, momentum, and a grin that's actually real. Because the work still gets done. I've just upgraded who's doing it. Click the link, hire your AI employees. You were destined to make it, so now's your chance.
Utiliser un CRM ne devrait pas être compliqué. C'est pourquoi nous utilisons Monday Sales CRM.
Dès que nous avons commencé à l'utiliser, tout a été fluide.
Oui, c'est un CRM prêt à l'emploi, intuitif et très bien conçu. Donc, ce qui était vraiment essentiel pour mon équipe.
Notre équipe recherchait une plateforme personnalisable, flexible et facile à utiliser. Et c'est exactement ce que nous avons trouvé. Désormais, nous pouvons suivre les contrats, optimiser la communication et intégrer de nouveaux clients et tout le monde est au courant.
Nous pouvons personnaliser nos rapports, nos tableaux de bord et presque tout sans avoir besoin de lignes de codage ou d'un consultant. Nous avons confiance dans cette plateforme, de l'implémentation, de l'assistance technique française au serveur européen.
Pour résumer notre expérience, travailler avec ce CRM nous a permis de conclure plus de contrats et de travailler plus efficacement. Mandez le CRM, essayez-le, vous en serez satisfait.
Miserable jobs report this morning. This is not what we were expecting at all. We were looking for 104,000 jobs and hawkishness from Powell. Even though Donald Trump posted on Truth this morning that Jerome Powell is a moron for not cutting rates, he says that all the time. So we didn't necessarily think it was a huge signal of anything to come for the jobs report. Certainly not what we just got blessed with. And I don't think it's much of a blessing. It's actually pretty damn bad. The only thing that's a blessing is that the coupon code expires tonight and you still have time to use coupon code release the files. But here's the scoop. We already know the headline. We were expecting 103, 104,000, depending on how you round and what the survey is. We got 73. Which is weak, but it's only weak by one standard deviation. But that wasn't the kiss of death. That wasn't the shocker. That wasn't what made us go, what the hell? It was the revisions. We lost 258,000 jobs in May and June. Gone. Evaporated. Last month, we were talking about the June report. Oh, strong report, 147,000 jobs. But when we looked at the details, you remember, because you watched this channel, you remember me saying, just be careful. Only 14,000 private payroll jobs were created last month. 14,000 were created, and we knew that last month out of that 147. That's because we had a big number on government and healthcare and some of these other sectors. Only 14,000 private payroll jobs last month outside of those sectors, government and healthcare. Well, now we literally revised the entire report down to 14,000 for last month. Over the last 2 months, we had negative 258,000 jobs and revisions. And this comes before the quarterly revisions via the QCEW, which usually take off even more jobs. We are now at the slowest pace of job gains since last August, which was right before the September meeting where the Federal Reserve cut rates 50 basis points. We might now be setting up for a 50 basis point cut this September. That'll be a game changer for house hack fundraising. We'll probably end that much sooner than we thought. We'll have to talk to the board about it. But anyway, remember, if you want to invest, go to househack.com, read the solicitation. The private sector added just 52,000 jobs on average over the last 3 months. Over the last 6 months, JPow's been bragging about how the 3-month average gains in jobs has been really great in the mid 150,000 range. Now it's just 52K on average over the last 3 months. In August of 2024, we were at 46,000, and then we panic cut 50 basis points. We're literally repeating what happened last year. The unemployment rate moved up to 4.248%, which initially looked like we just went up 1/10 of a basis point, of 1/10 of a percent rather, about 10 bips. But we actually moved up more than that. We moved up to basically 4.25, and that's with labor force participation falling. So maybe this is why JPow gave us that warning, hey, pay attention to the unemployment rate. That's what we're going to be looking at, because the unemployment rate just moved up, while at the same time the participation rate is falling, which is really weird. The participation rate is either plummeting, which you can see right here, from 62.7 last year to 62.4 in May to 62.3 in June to 62.2 in July. This is either happening because of the ICE raids and people are wanting to stay home, or this is people are literally just getting squeezed out of the labor market because the labor market is not doing so well. Now, a weird thing that happens when the participation rate falls, you actually mask a higher unemployment rate. If the participation rate were the same rate and more people were unemployed, the unemployment rate would be skyrocketing right now. So the only reason it's not skyrocketing is because of that participation rate falling. This is where J-Pow kind of gave us this. Hey, like, there's less hiring, but there are also fewer people in the labor force. So, like, does that balance out? We don't know. Like, he kind of was giving us a hint of this report coming, but these revisions were way nastier than anybody expected. And so as a result, we now see the 10-2 spread back to 49, almost 0.50, shock level. We actually, looks like hit 0.50 right here. And this is despite things chilling out over the last 2 weeks. People were very comfortable. Hey, the economy's doing better. Things are doing good. But this is starting to be an indicator that we're getting real cracks now in the labor market, which is the last leg holding this economy up. Frankly, if you really want to know what the real last leg is that's holding the economy up, it's the lack of layoffs that we're seeing. Once we start seeing layoffs, it's over. We're in a deep, dark recession that could take a long time to get out of because AI is going to keep the boot on this labor market. And it's going to, like, I'm not trying to bear, I'm trying to just give you a very realistic heads up. We're at the top of the market right now, okay? I'm not here to be a bear. I'm just here to say, oh, here it is. Look, the QCEW comes out September 9th. See, preliminary benchmark revision to establishment data comes out September 9th. So we're still a month away from the QCEW revisions. Yeah. And we got a negative 258 now. That's insane. You know, you can see the 258 right here, which is crazy. But anyway, you know, add layoffs to this. If it starts becoming socially acceptable for companies to lay off, rates are going to plummet. But that's not going to save the day. Yes, currently the stock market and futures are pricing in now it keeps going up. We are now pricing in an 85.5% chance of a cut in September and a 50% chance of a second cut in October. We are now fully pricing in 2 rate cuts for the year. This was a game changer jobs report. Holy smokes, man. Without healthcare, the last 3 months of payroll would be negative 53,000, negative 45,000, negative 300. We should have cut. This is why I'm kind of surprised J-Pow was so hawkish. I mean, it sounds like he knew some of these components. I don't know if he knew these revisions, but man. Government payroll now down 6 straight months. Odds of a September rate cut now again. They just revised again. Yeah, 86.5%. Okay, that's just a flash of it. 86.5% now. That was from the mid-40s after Powell's hawking just 2 days ago. But this is actually a sign that Powell is indeed earning his nickname, Mr. Too Late. Nick T tweeted that Bowman this morning told us that, here it is. Bowman explains her dissent in favor of a rate cut. Economic conditions are shifting. I see the risk that a delay in action could result in a deterioration in the labor market and a further slowing in economic growth. Taking a proactive approach and moving closer to neutral would avoid an unnecessary erosion of the labor market. Remember, folks, rate cuts don't stop job cuts. Rate cuts don't do it. Money printing does. But we're far ways out from the money printer. And so we really got to hope that this shock of a payrolls report isn't the beginning of a layoff cycle, because it just forecasts hell. Anyway, now we're going to jump on over to the course member live stream. We're going to do our alpha report together. We're going to talk about what the play is, the trades, the lines, because this is a crazy, shocking jobs report. We got to get into the details of it. So with that said, thanks so much for watching. We'll see you, and we'll be over at the course member stream in about 2 minutes.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
L'immobilier ne te rendra pas riche en 2 ou 3 ans, autant se le dire tout de suite, et c'est pas parce que tu vas réaliser un investissement locatif réussi ou une opération d'achat-revente qui aura été super rentable que tu vas pouvoir tout de suite devenir millionnaire et te pavaner en Lamborghini ou faire je ne sais quoi à Dubaï ou autre. Par contre, ce qui est certain, c'est que si tu investis intelligemment, que tu réalises des opérations d'achat-revente de manière sensée, eh bien, tu peux réellement changer ton destin économique. Tu peux aussi changer de vie, c'est-à-dire avoir plus de temps, plus de passion, t'épanouir et aussi gagner plus en investissant moins de temps dans ton activité professionnelle. Je t'ai préparé une vidéo dans laquelle je vais t'expliquer en 20 minutes comment les opérations de marchand de biens et d'achat-revente en immobilier peuvent changer définitivement ton destin économique. Donc je te laisse cliquer sur le lien sur la vidéo. De toute façon, que tu la regardes pas, pour moi ça changera rien. Le monde va continuer de tourner, mais c'est juste une opportunité pour toi, peut-être de prendre un chemin différent dans ta vie.
Shares of the world's largest corporate holder of Bitcoin lower this morning. MicroStrategy is now known as simply as Strategy, reported its best quarterly profit ever, well above the loss that analysts were expecting, reversing the year-ago loss. The company now holds more than 600,000 Bitcoins. Join us now, Michael Saylor, the company's executive chairman. 3% of all the Bitcoins that will ever be minted, 628,791. Owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? So 5 times as much because of demand?
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about, the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have, are they all orange now? Mostly?
We only wear orange ties.
You only wear orange ties? Because I went to D.C. and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin. And on, I had a picture that I put out, and on Twitter, I'm supposedly a holder. And it's dangerous to do that unless you're Michael Saylor. I'll just say that.
The future is orange, Joe.
Unless it's Halloween, my wife's birthday. So these numbers were staggering me. It's very arcane, very hard to understand. Are you basically just a leveraged acquirer of Bitcoin, and that's what your company is?
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Is there ever too much Bitcoin for you to own? Like if you could own all of it, would you?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more than
I
us.
just wonder. I was thinking about the mental exercise of if you could actually own all of it. Like if you would even, bless you, if you would want it.
Well, you know, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it.
Right.
So as a practical matter, what we're doing is we're monetizing and powering up this.
I totally get it. I
digital
just mean, if
commodity
you
in the world.
owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it.
I wouldn't want to.
We want everybody else to have their
I think
piece.
so.
The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK. And then there's a raft of them in the US, Anthony Pompliano's company, you know, and 21. They're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Sort of a philosophical question about treasuries, actually. And I don't know how much you believe in U.S. dollars these days. But the question is, if you believe that corporations, if you believe one day Warren Buffett, instead of holding
well,
300,
maybe not Warren Buffett.
What?
Maybe not Warren.
Well, you know, instead of holding $300 billion of treasuries,
calls it rat poison.
He would hold.
$60 billion.
It's not going to be Warren Buffett.
He would hold, you know, that all these companies, instead of holding cash or treasuries, they would all hold their money in Bitcoin. If that were true, what would that do to the U.S. government and its ability to operate?
Well, I think the key to keep in mind is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So, in general, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, you know, what we're talking
Bitcoin
about?
does.
Alibaba is taking on Meta's wearables with AI glasses of its own. It's the latest in the U.S.-China battle for AI dominance. Join us now. Lead Edge Capital founding partner Mitchell Green. Mitchell is a longtime investor in Alibaba and Ant Group. He's also an investor in ByteDance, and he does crazy things sometimes when in a chair, right?
The real question will be, how many years do I get to come on here until we have till I get to come on for like the ByteDance IPO? That'll be that's the $1 billion question.
Looking at a lot of your thoughts and comments, I think you're very excited about AI and what can happen. But would you buy any of the top tier leading AI companies at this point? And is there a way to engage in this transforming?
What's going on?
Yeah, is there another way? Where else can you do it if you don't want?
It is clearly transforming. I mean, all your viewers.
But you wouldn't buy any of them. You wouldn't buy any of the main.
We're not buying. I think the way you play it, especially if you're a retail investor, you should go buy the hyperscalers that you can see are putting up, and they're going to dedicate massive amounts of capital to this space. Whether it's Facebook. I think Amazon said they're going to spend $60 billion or something in the second half, and spent $56 billion in the first half. I think Google said they were going to spend $85 billion or something. We really don't know how you compete against those giant hyperscalers, and the cost to serve a search with with Anthropic or OpenAI versus Google, who spent the last 20 plus years.
Do you think they become the winners of this?
We think they're the big
and you think, therefore, where do you put so some people are saying they want to get access to like an OpenAI. And they would say the way to do that today, oddly enough, would to say either to buy into Microsoft, right, because embedded in they have a big investment, is in OpenAI, or into SoftBank. Those are two public, effectively, vehicles.
SoftBank can get a lot of other stuff. Look, if you're a wealthy enough individual, it's been rumored that both Anthropic and OpenAI, actually these companies are constant fundraising companies.
Yeah, of course they are.
Which also means you're going to get diluted. We have not invested in the big models. And by the way, we're idiots. We should have. We could have invested in some of these early. And again, you could sell the stock. I know people that invested early and have already gotten out and made a bunch of money. Our concern is, we could be completely wrong, is that how do we know these aren't Excite, Lycos, and AltaVista? Search engines from the 90s that had massive consumer trends. You might argue, I can take this side of the argument, that OpenAI is dominating the hearts and minds of consumers. The DAUs and MAUs are just through the roof, so they'll win. Means they can attract the best talent. Here's the problem. The likes of Facebook, Microsoft, and Google and Amazon are paying engineers like they play in the NBA. And so the amount of not only OpenAI can offer equity, but these companies can offer hard cash. What they did with what Facebook did with Nat Friedman, who's a dear friend of our firm, an absolute rock star engineer. But the dilution for these companies, it's something that a lot of people in Silicon Valley, people don't talk about enough. The dilution at some of these private AI companies is absolutely insane.
That's interesting.
Nobody talks about this. The war, while the biggest, some of the best innovation is coming out of Silicon Valley, and it's for the last 20 years, and will continue for a long time. The amount of stock option dilution that at the same time also comes out of this area is absolutely just remarkable, would be one way to put it.
That's how they're
it's
holding.
Good to be an engineer.
That's how they're holding on to the talent, not because they have a more open workplace and we're going to let you do what you want and all these things. No, it's that you get to own a
piece of the company. And the crazy thing is, never before have you seen really the amount of dollars that are being given to some of these AI engineers.
It's more than 100 million, right? That's the headline we've heard.
Some of these numbers
are multiples bigger than that.
By the way, they're like NBA players.
Yeah. Right.
Right. A lefty with a good. They can also hit.
Tell all your kids to become they're in college to become AI engineers.
But it's still It's not something you would assume that instead of buying the companies that are going to, be selling into all that capital expenditures from the big meg. Seven, you buy the people that are actually spending the money instead of the ones that are benefiting from supplying the.
They're just giving money, not stock.
Yeah.
They're giving money. They're not. And
that's enough of a reason.
It is crazy. We're sitting here today, and after yesterday's earnings pop, Facebook is a $2 trillion company, growing. What did earnings grow yesterday? I think top line grew like 20 or something like that. So not only are they seeing. They're making investments, but they're seeing margins increase as well. The DAU count at Facebook is absolutely incredible. I think the best way to play AI is go buy the big hyperscalers yourself, and they're not crazy expensive on an earnings multiple.
Just trying to see how do they use AI to leverage? I guess that everyone uses it differently to leverage their own business, their business.
Okay, here's a question for
you.
Who pays down the road? What are the iterations? Because this stuff is really expensive. I heard recently that there's a healthcare company that doctors work for, that this healthcare company wants the doctors to pick up part of the expense for the AI agent to make them more efficient. And the doctors are mad, obviously, about what happens with this. It gets to that question of who does pay for the expense of bringing the artificial intelligence on board. It's not cheap. It's going to hurt margins if you don't have a way to offset it.
And several people could argue it's going to be commoditized. Yeah. Well, you might argue, how has Google become the cash printing machine it has? The advertising business, obviously. Who pays for the ads? At the end of the day, it's probably consumers. Although on the flip, you could argue prices. That means prices should go up and things like that. I think people always overestimate technological change in the near term, and they always underestimate it long term. We just believe this is like the internet bubble all over again, where this stuff is going to completely revolutionize the world over the next 20 years. It's just we are probably still in the 1999, 2000.
And then the question is, how do you pick the winners and losers now? Because it was not clear then.
It was not clear then. which means it's probably not actually clear now. I do think there is another interesting thing. So I was with a CEO, a retired CEO earlier this week of a large consumer goods company, and he's on the board of a bunch of big companies. And I asked him, are you now starting to see, like, the AI, they'll get board report, are you now starting to see like real ROI from some of these AI projects, like internal? And he said they are now, it's some of the boards he's on, in dribs and drabs, not widespread yet. They are starting to see like real ROI with this stuff.
Do you think the market follows suit, and if we're in 1999, that there's a 2001 coming?
Everybody sure seems bullish. And one of my dear friends, Steve Cohen from Point72 and SAC, always says, if you ask 10 of the smartest hedge fund managers, or go ask 50 people on the street where the market's going, and if 48 of them say one thing and 2 says the other thing,
go with the 2.
Go with the 2, and if you do that over and over again, you'll probably make money. It just seems that, as Ed Yardeni has said, the market just keeps grinding higher. Yeah. I don't know, and I think what will make it pop is something that nobody's. I have no clue what it is. You guys don't. I don't know. It just seems like we're a little complacent.
Jesse
right now.
Livermore said it before anyone. He still jumped, I think.
Yeah.
I had Jensen Huang on the BG2 podcast last year. It's when people were saying, oh, this training is hitting an upper bound and all this AI is overblown. And remember, NVIDIA fell and all these AI stocks were falling. And Jensen Huang said on the podcast, he said, we are now moving into inference time reasoning, where the machines begin to recursively think for themselves. And he said at that moment, inference isn't going to 10x, it isn't going to 100x, it isn't going to millionx, it's going to 1 billionx. Everything in the world is going to be inference. And what has happened this year? Exactly what he said. The token production at Google has gone parabolic. At Amazon, parabolic. Why? Because everybody in the world is using ChatGPT to get answers to their consumer questions. Every single search now on Google is an inference search because they want to give an AI answer. The era of 10 blue links is dead. And now every single person on the planet expects answers. And for enterprises, they expect the same. And I will tell you, we are in the first inning. It may be the first batter in the first inning. And so it feels like a lot. But what we're seeing this year, what we're hearing, these moves by the biggest companies on the planet, none of this is surprising. This is the beginning of a massive wave. Oracle reported last night. Right? Incredible numbers, accelerating numbers in terms of the data center and compute build out. Jensen Huang said over in Paris this week, he estimates $1.5 trillion of AI compute build out. On the Middle East visit that I was on recently, we're going to build massive Stargate cluster in the UAE. They're going to build in Saudi Arabia. We're going to diffuse AI technology from the United States critically around the world with the repeal of the Biden diffusion rule, which was essential. And so we are in this phase of acceleration. It's not to say that there won't be companies, right? They get overvalued in that phase. But I just gave a talk this past weekend at my 25th business school reunion up in Boston. And I talked about Henry Blodgett's $400 call on Amazon back in 2000, right? What do you think Amazon is today relative to the $400 call that Henry Blodgett made in 2000? He got ridiculed and laughed off of Wall Street for it. But Amazon is up 87 times today from where it was when he made that call. The reality is we overestimate in the very short term what these things will do, but we dramatically underestimate in the long term. And that's what I think you see in the market today. You see this acceleration because every one of the smartest players in Silicon Valley, whether you're running Amazon, whether you're running Meta, whether you're running OpenAI, whether you're running Google, they all tell me the same thing. We have to do whatever it takes in order to capture and invest in that future. That's why their CapEx is going parabolic. That is great for the entire AI compute stack, whether you're TSM, whether you're NVIDIA, whether you're CoreWeave, where we're investors as well. All of these companies, ARM, et cetera, are going to benefit from that compute build out. And then now we're seeing it in the applications, right? The companies I mentioned, like Snowflake and Databricks, we're seeing it, in the end user applications where we're seeing accelerating growth at places like ChatGPT, right? ChatGPT got to 1 billion searches a day, right? 8 years faster than Google did. This is not internet time. This is AI hyperspeed. It is way faster. OpenAI today is 4 times the size that Google was when it went public in terms of revenue, in terms of searches, right? So I think for people, now is a time where people could say the market bounced a lot off the bottom, right? I came on here when, earlier this year and said we had taken our exposures way down because I wasn't sure whether government was going to be supportive or whether it was going to get in the way of this AI supercycle. Now it's very clear to me they are pushing it. They know in order for America to win in the balance of global power, we must win in AI.
So, Malcolm, don't look at from the bottom to today. Look at from today to as far as tomorrow, literally and figuratively, can bring you when thinking about these stocks. Everybody owns Amazon on the desk today. You own Oracle, so you understand what Brad's talking about. How do you see these stocks now?
So let me first clarify, I don't own Oracle personally, but a number of our clients do. But I completely agree. I listened to the Oracle call, for example, and I hear Ellison talk about how he's getting phone calls from CEOs who are saying to him, I just need the capacity regardless of where it has to come from. Go get me capacity and I will pay you for it. Probably not in the history since the invention of the internet has that kind of a conversation and that kind of a gold rush been the conversation. So you're talking to somebody whose own personal portfolio over-indexes by a wide margin to software and a lot of the companies that we're talking about. So where you talk about tomorrow and what does tomorrow look like, my one concern in this conversation we're having, not looking the next 2 years, 5 years, 10 years, but just over the next couple of quarters, we don't know how much of the great earnings that Josh was talking about before from Q1 was the pull forward from folks worried about April 2nd. We won't know for another 3 or 4 weeks, and so this is the moment where the markets probably continue to chop sideways until we start to get into Q2 earnings and find out the answer to that. That's my one concern with relation to how hot the market feels like it's rolling right now. We could be about to get some pretty soft guidance from CEOs, which changes a lot of people's attitudes and appetites.
I thought the AWS CEO, Josh, gave us a pretty good reality check. Is literally, we're talking $35 billion in a couple of days about data center, not to mention the billions that the company is investing around the globe. You own the stock too.
Yeah, it's I would say at this moment, it's my favorite of the Mag 7 names. And obviously AI and data centers are a really big part of that story. I just think there's still a lot of money that could come into the name as they start to pull the levers that they are able to pull, and we're starting to see like the real-time results of all of this capex. And it's not just about we have to invest now for 3 years, but it's like no, you don't understand. We're investing now because right now the activity is happening. The land grab is in full effect. I think one of the things that we have to continue to remind ourselves is that the tariff-related situations in the stock market, most of them are not Apple. Most of them are just not terribly important to what the index does. So, and those stocks that have a tariff issue have already been punished. We have just seen absolute whippings in the apparel sector. Look at Nike. Nike is in addition to all its other problems, is a tariff problem. And so it's not as though we're not pricing in these issues. It's that until now, they just haven't affected NVIDIA, haven't affected Microsoft, and they may not. We don't know. So NVIDIA took a massive write-down on China-related stuff, and the stock rallied. So, we are pricing in the impact of the trade war. We are pricing these things in. It's happening on an individual company basis rather than a market-wide basis. And the reason is the biggest market cap companies that are providing most of the earnings growth for the S&P 500 based on bottoms-up outlooks are not going to be affected by tariffs until tariffs spill over and become like an unemployment story. But that hasn't happened yet. So we're kind of in this stasis, and what we have is effectively earnings growth coming from the most important and the largest market cap companies.
Go ahead. Would you agree that the issue with Amazon's share price, though, specifically as also a shareholder who thinks it's probably the best stock in the Mag 7, the issue may be that investors are considering this an e-commerce play and not paying enough attention to the underlying tech components that you just laid out?
All of the earnings growth is coming from AWS. So if you see the stock rally, it's because people are bullish on AWS.
Not to mention the fact that when I was having the conversation with Matt Garman, and the way people are framing to your very question and to Josh's point, is that AI, as some have written, Amazon wants to be the marketplace for AI. Forget about the marketplace that we all grew up knowing Amazon as. They see themselves as being just that, but for the revolution and the technological innovations that are happening, for AI in and of itself. You guys hit on other interesting points as well. As we speak about the arms race, it is not just Amazon versus Microsoft versus XYZ company, and then the next ones that aren't even public yet. It's the United States versus China. NVIDIA plays a role in that. It plays a role into the trade war, too. Jensen Huang telling CNBC that Huawei, quote, has got China covered if the U.S. doesn't participate there. I thought we had a really interesting conversation with the Andreessen Horowitz general partner, Anj Midha, the angel investor in Anthropic, who talked to me about that arms race and why we have to win it. Let's listen.
This race is happening with or without us, right? Look, it was an extraordinary piece of engineering that DeepSeek put out, right, from China. What it also showed was that our adversaries aren't waiting around for us to get our act together. And so, one way or the other, we don't have a choice but to win.
Brad, I mean, the trade war figures into this conversation heavily, and why there is no choice. We need to come out number one.
This is a critical issue, and I want to unpack two things here, Scott. The first one is about diffusion of American technology to the entire world, right? We call this American AI diffusion. We need the world to run on the American AI stack, okay? A week before the Biden administration left office, they passed a rule called the Biden Diffusion Rule, which was 100 pages that tiered all the world and said, here are all the rules and hoops you need to jump through if you want to sell chips or models to India, to the UAE, etc. It would have literally devastated our ability to distribute the American AI stack to the rest of the world. It would have been the equivalent of Google in 2002 having to come to Washington, get on bended knee, and beg the FDA of search to allow them to distribute Google to another country, and the world would have ended up running on Baidu, okay? We didn't do that in 2002, and we should not do it today. The good news is the Biden diffusion rule was repealed by Howard Lutnick, and it needs to stay repealed. We should not run into the void and put a whole bunch of rules in place. We should do exactly what we did in the age of the internet. We should allow our companies to compete, and in the future, a year from now, 2 years from now, we decide we need to have speed limits, safety belts, etc. There'll be plenty of time for that. But right now, we need to get the American technology out into the world. The reason for this is because when I was in Saudi Arabia, right, Huawei has gone from 0% market share in Saudi Arabia to 50% market share in Saudi Arabia. You can't tell our friends and allies around the world, like India, like Saudi Arabia, that AI is the most important thing in the world, but we're not going to give you our technology. It's crazy. The Chinese have a full stack. They have chips from Huawei that are only, maybe a half a generation to a generation behind NVIDIA. You just buy more of them. You link them all together, and it's the equivalent. They have the DeepSeek model. They have the full stack. This is an arms race. The U.S. needs to accelerate, and we need to get the decelerationist in Silicon Valley who are trying to use regulatory capture to slow all this down. We need to get them out of the way, and we need to get cooking around the world. That's the rest of the world. As it pertains to China, real quick, Scott, there's this belief, right now, NVIDIA has, it went from 80% market share in China, where all the developers, second largest developer market in the world, were developing in CUDA, right? We had them in an American ecosystem, and we were selling them chips. And NVIDIA was paying the U.S. Treasury billions and billions of dollars of taxes, and they were plowing those profits back into staying in the front. Now we've ceded China to Huawei. By giving them monopoly profits and giving them that entire developer ecosystem, it's going to make it easier for them to win the global AI arms race. We need to get NVIDIA back into China, competing with the B30. We need to take the the competition to Huawei in their home market, keep those developers in the CUDA ecosystem, keep that market share. That will make it easier for us to win around the world. So these are critical decisions that government is making right now that will determine the next decade as to whether or not we win in the global AI balance of power. And I think we have to win.
All right, welcome back. Tech stocks back on top this week as investors look past the trade war, at least they try to, and refocus on the promise of AI. Software in particular outperforming today, which brings me to my next guest. He's ringing the closing bell today after a quarter century of making his mark on the industry as a leading software investor. Robert Smith is the founder, chairman, and CEO of Vista Equity Partners. He is with us at Post 9 in a CNBC exclusive, and I can't tell you how happy we are to have you.
Thank you for inviting me. Excited to be here.
Congratulations on this great milestone. I know you have many family members here, and you're going to be on that balcony, which never, ever gets old.
Never gets old. Exciting.
Could you have imagined that Vista would be where it is today, 25 years later, 90 portfolio companies, $100 billion in assets under management, 600 plus transactions, more than $315 billion in transaction value, and annual returns that are just astounding. I think somewhere around more than 30%. I mean, those are incredible numbers.
Thank you, Scott. Yeah, can I imagine? I think so. And I will tell you why. You know, I learned early on in my career as an engineer the power of enterprise software, which is what we focus on. It has been the most productive tool in our business economy over the last 50 years, and likely will be for the next 50. But it will now be powered by artificial intelligence. And so it's an exciting time to be an investor in software, an exciting time to be Vista investing in software.
We'll get into all of that, obviously, which I want to. You've managed through so many different economic cycles.
Right.
And crises that come up and other issues that you have to manage through. How do you assess what's happening right now?
A few things. In our world, you know, software has proven to be not only the most durable, but one of the most resilient in these environments. It has become enterprise software, mission critical, business critical. All industries rely on it. All companies rely on it. And in fact, when you have challenges with labor, you have challenges with trade in environments, people lean into software. In fact, during COVID, one of the expressions that occurred where people lost visibility on their supply chains, their customers, their even their own employees. And so as a result, they invested in more software, which actually created a pull forward of revenue, which is why we saw that peak in 2021. So the dynamic of enterprise software still powering really the connectivity in business hasn't changed. What has changed is people are gaining more access to it. You know, people now have the ability to invest in some of these private equity funds in enterprise software that I think is going to actually rebalance the opportunity set and democratize investing.
What do you make of the trade war? Where do you think how's it going to end?
I think there will be a series of bilateral agreements that will bring, again, a new equilibrium environment, which I think is what is sought after at this point by numerous parties.
A balance.
A balance, but it's a new equilibrium. And will be different than what it was, and hopefully it will be more fair for countries that felt that they were being abused in certain dynamics. And I think that will then reignite the markets in a way that will create a roaring opportunity to take advantage of artificial intelligence being introduced into each of these businesses and these industries.
How are you thinking about the kind of time frame? Because you need to think about all that kind of stuff when you're thinking about where you're going to be investing.
Yeah, there is this predictable volatility for a period of time, and I know the Treasury Secretary came out and said it'll be 90-day pause through the administration to actually work on cutting these trade deals. And my guess is there's going to be, in that period of time, I hope, a number of trade deals that now settle the markets, give visibility, give transparency as to how we're going to interact as trade partners throughout the world. I think you'll see certain blocks starting to form and crystallize. But people realize I have the great opportunity to be investing in all over the world. We operate in 180 countries. And you can see the demand and the desire for people to get back to some business as usual and trading with some clarity as to what the agreements are.
I found this interesting article today entitled, "China has an army of robots on its side in the tariff war." The point being is that we're not the only ones who are trying to make this tremendous leap forward.
Right.
How do you think about that?
We've known about this for some time. You know, once we distributed compute, which we have over the last 20 years, for many years compute resided in a few places, and then once we got the cloud compute, it resided pretty much ubiquitously everywhere. And as a result of that, people could access it, utilize it, and that created a massive opportunity for invention to occur around the planet. And of course, in certain pockets, others outstripped others. So, we've known about this for quite some time. We, of course, continue to rely on our education systems in America, the way that our businesses are organized, and free enterprise. Free enterprise for people like me who grew up as a young lad in Denver, Colorado, the son of school teachers, to build a business based on technology, software. Very few places in the world does that occur. And so I think in America, we still have infrastructures and institutions that enable that to happen.
We talk about tech and software probably every day in one form or fashion, just because it's such a popular place for our viewers to be investing. You look at what's happened with technology, stocks. Your bread and butter, obviously, is enterprise software. We track it through the IGV, right? The ETF that tracks the space. It's down about 15% or so. Do you think that area has corrected enough?
I think what is happening is there's a major bias right now towards artificial intelligence and artificial intelligence infrastructure. The vast majority of capital is flowing in that direction. And as a result of that, people haven't realized, like in every other cycle, hardware vendors typically get the first wave of the economic rent in technological advancements. The second wave goes to typically infrastructure providers. The third and most profitable wave usually goes to software, and enterprise software in particular. And so there will be a period of time, which, in the downturn, we've now taken 6 companies private. We've also done a number of private company transactions. When these companies become agentic or Gen AI enabled, that you really start to see the benefits of what this new technology and how it will feed software. That's the advantage of being in the private space that we're in today.
Part of the point you're making, and in the list that you just gave, is that you think software may be the last to see the great benefit, but when they do, watch out.
It is huge. Because remember, we don't have CapEx requirements, and we have massive productivity. Our average company, which we measure today, the products they serve their customers is over 625% ROI. There aren't any other businesses that have that sort of return on investment. And when you supercharge that with agentic software and artificial intelligence and Gen AI, the ROI will go up exponentially. The real question is, how do you ensure that you distribute this effectively to your consumers and your customers so they can take advantage of these tools as quickly as possible so that they are more competitive in the markets that they serve?
You're talking about traditionally what has been looked at or called the rule of 40, potentially becoming exponentially larger, a rule of 60. I'm trying to think of how our viewers should be thinking about this whole space and the growth that you foresee it having.
Sure. To give you just an example, every level in the P&L statement will have some impact. AI will have some impact on it. If we just take code generation, in the world of enterprise software, that makes up a pretty large chunk of our cost. And we actually I had a few of the folks who are running these big LLM systems that now actually have code assist tools that they've introduced into our markets and our environments, some of which we have very exclusive partnerships with, that can reduce the cost of code by 50, 60, 70% in short order. And so the productivity and the reduction of the cost of code creates a massive increase in the P&L. So that's how you can go from a rule of 40 to a rule of 60, rule of 70 in short order, utilizing an AI tool on just one aspect of the P&L statement.
I talked to you about how the space has corrected in terms of equity prices. You must look at the opportunity that comes through the dislocation.
Absolutely.
How so?
Well, part of for us is, we look in our flagship fund and which are the deals that we should take private in these environments that may be lagging in their adoption of the next generation of tools. One of the things we did very effectively in the last cycle when we were converting from on-prem to cloud was identify those businesses. The public markets punished those companies that didn't make that conversion fast enough. We were able to take advantage of that, buy companies, transform those businesses, and actually accelerate their growth and their profitability. There's going to be something similar occurring from companies that are now cloud native or on the cloud to agentic. And building an infrastructure to do that effectively at scale is part of our mission.
When you have valuations correct, theoretically they become more attractive for somebody like you for potential take private.
Right.
Correct? I mean, you've done, I think, a half a dozen since 2022.
Correct.
Where do we see that moving forward? I mean, what does the marketplace look like to you now? Is it getting to the point where you're starting to say, okay, we're going to have some real opportunities that we might not have had a few years ago because valuations were too high?
It is in that point today. As you say, Smartsheet was the latest one that we took private. We have our eye on 5 or 6 others that we think are going to be exceptional companies when they become agentic and when we can convert those businesses to be Gen AI enabled. And so you will see us continue to take deliberate, focused, and measured action in that regard in taking companies private in this environment.
I watched a talk that you gave at North Carolina AT&T where you described being the first M&A banker on the ground in San Francisco back in '97. Right. You were a mentee of Gene Sykes. Right. You called the best M&A banker who ever lived. You saw, my point is, you saw the internet, right, if not at its most nascent stage, in its middle school years, maybe. Right. So you have good perspective between then and now. How does this revolution compare to what you saw then on the ground?
Orders of magnitude greater. However, it's not going to come easy. You will actually have to embrace this technology and actively drive it throughout your organization. People are often resistant to change, reluctant to make change. This technology, as we've seen it across our portfolio, 100% of our companies now are using code generation. 100% have a product to market or under development, and 100% are using it for reduction of cost in the implementation of their actually operating their businesses. But it takes an evangelical type of a fervor to get people to adopt this technology. But once they see the power of it, you see an acceleration of the utilization of it. That's what's happening today. And it is orders of magnitude. That's 625% ROI, orders of magnitude more benefit to our customers.
Bain & Company wrote in its 2025 global PE report of you guys, quote, "It's safe to say that software specialist Vista Equity Partners has gone all in on generative AI. Firm leaders are already convinced AI represents a paradigm shift in innovation that will ultimately create a multi-trillion-dollar investment opportunity." That says very much this is very early innings in your mind.
It is very early innings, but you have to get there fast first. And I think that's an important part of what we're focused on.
So first matters. First mover matters.
Absolutely. In certain industries, this technology is so powerful in what it does. You have the ability to not only turbocharge your value creation for your customers, but it will actually give your customers the opportunity to be more effective in their markets. And so I believe the consumption dynamic, when people see the value of it, will be absolutely exponential in its draw.
Because we're trying to sit here and pick out the winners, and I almost thought that you were going to say there's going to be many winners. Yes, it's okay to be first now, but you don't necessarily have to be first to take a lot. And that there can be many, many winners.
There can be many winners, but there are going to be losers in this market. What's going to happen? Certain companies will become agentic. Certain companies will, I'll call, become Gen AI enabled and their customers. Others will not have a right to exist because they will not have adopted and evolved properly and fast enough to take advantage of this technology, and their competitors will eat their market. So that is something to be very conscious of and focused on.
Data centers, one of the fastest growing areas. We talk about it obviously all the time, and I know you think about it all the time. You acquired Logic Monitor back in 2018 for $415 million, partially realized at a $2.4 billion valuation last year. There's a little bit of a fear on the street that there's been some overinvestment in data centers. How do you respond to that?
I don't disagree with that.
Oh, you don't?
No, I think, again, from our calculations, it's our calculations, we calculate over $1.5 trillion of expected capacity going into the marketplace. Now, of course, there's all sort of activities, these are data center capacity, all sort of activities around the power, use, generation, ability to deliver that power, cooling. There's a lot in that supply chain that will take some time. And, of course, everyone's thinking selling that capacity to the hyperscalers. Well, at some point in time, you have to start looking at what hyperscalers need, what capacity, what levels of latency, et cetera. So there's a dynamic there that, quite frankly, I'm not sure all the equilibrium sets are fully understood. In the way that we look at it, we think there's overcapacity for the utilization requirements for agentic enterprise software today.
You like that term. The equilibrium systems is something that has driven you from your days as a chemical engineer that there was no difference in your mind. If someone says, well, how does Robert Smith go from being a chemical engineer to the foremost software investor in the world, it all is tied together through that, where you saw the equilibrium systems then, you see now through software and markets.
Right. This is all an equilibrium system, the buying and trading and finding different levels of value. What is something worth to one person versus another? An asset, one person's asset is another person's liability in certain of these marketplaces. So part of what we have to do is identify not just the equilibrium state, but what are the things that are changing that state? Introduction of new technology, introduction of liquidity in the marketplaces. Those all change the state of that equilibrium. Identifying it, embracing it, recognizing it, and delivering that as value to, in our case, our shareholders, our stakeholders, what our job is.
Okay, you're celebrating 25 years. Yes. I've mentioned you're one of the most prominent voices in finance. Given your philanthropic endeavors as well, the incredible Morehouse gift, and how you think about the future and the future leaders of this country, I want to ask you about DEI, which has become a huge target, as you know, by this administration. You said at the Economic Club of New York a couple of months ago, quote, America should be a place of meritocracy, but not just meritocracy in race, but meritocracy in an opportunity set. Right. Explain what you mean.
That's what it's all about. We have to open the aperture of opportunity so our people, our Americans, can participate in this great experiment, this great idea of America, which means how do you get the smartest people? People who grew up in certain economies, they may be brilliant, but may not have access to opportunity, irrespective of race or gender. Part of our job is to make sure that we, as business owners and business managers, open up the opportunity so everyone has a shot and everyone has a chance. And that's what the promise of America is all about. So it's our job to ensure that we do our part to ensure that happens. It also shown that the more diverse workforces are and boards, the lower the risk, the higher the returns. So the math supports the idea. We just need to make sure that the windows of opportunity, including internships, are open and wide enough, and we are consciously looking for ways to improve the quality of the work that we do across every industry.
You mentioned the way that it was administered, I think was the word you used, as maybe being the issue. It almost takes me back to the way you look at equilibrium, whether it's in chemical or markets. Did we get out of balance too far in the way we approached DEI? And are we in danger of swinging back too far the other way? And do we need to find our balance?
As you say, that's the definition of an equilibrium system, right? It goes through swings. And at some point, we will find what is the proper balance where we have stability and opportunity can actually produce the best results. And that's part of what our society does. It goes through these swings, in different ways at different points in time with different magnitude. And so part of what we have to do, if we think it swings too far one way, then typically there's a force that brings it back the other way. But we as business owners have to do what's best for all of our stakeholders, which include, of course, our investors and our employees. What is the environment that they are living in and they are working in that makes them most productive and brings the best minds, thinking, capabilities into that environment every day? That's what our job as senior executives is, in my opinion.
We didn't even get to your book. We'll do that next time because it comes out later in August, I think, correct?
Yeah, it is. I'm excited to see it.
All right, you have fun on that balcony. Thanks for spending time with us.
Pleasure.
Congratulations. It's Robert Smith being with us
Pleasure.
today here at Post 9 of Vista Equity Partners.
What if
get dangerous mode on Claude Code, and what is dangerous mode? Dangerous mode is alpha, dude. Dangerous mode makes it so you don't have to click OK for everything. So I have to work fast here, so I'm going to get liquidated. But essentially, they have a problem. Essentially, there's a problem on this exchange where if you get into a losing position and you're using your full balance, it... Yes. Yes, dude, yes. Okay, so let's give her both of these. Actually, matter of fact, you can see both explore both the documentation links inside of the readme.md. I'm chilling, bro. How are you, dude? Oh man. Oh man. First couple sips of coffee for the day, so you know that's good. You know that feeling. I understand the issue. When you're in a losing position, your full balance, the exchange shows a negative available balance, preventing position closure. This is a critical problem for trading bots. Let me investigate the documentation and current code to find a solution. Explore extended exchange documentation for position sizing. Okay, good. So they've got a really weird quirk where it will show a negative balance. And we should be able to see that here soon and then be able to fix it. We should be able to fix it pretty quickly. I think, at least. I also hit their support team up and said something about it because, you know, that's a little weird little quirk for a trader, you know? Algo trader is like, oh, it can't get me out of the position. Okay, let's see what explore extended, analyze current code base for position management function. Okay, great. I'm almost at a negative balance. Come on, go down. I've never rooted for the price to go down, but go down. Identify and implement solution for a negative position balance. Test with current position, losing position. Looking at your fixed position file, fixed closed position file. You already attempted this approach, but I noticed some improvements we can make. Okay, there we go. What are you guys working on today? Muffy, what you doing? Matthias? Good to see you. Good to see you both. What you guys grinding on today? The issue is the extended exchange prevents all order placement when available for trade is negative. However, position closing orders, including position closing orders. However, I found a solution using the reduce only parameter that should bypass this restriction. Okay. Let's see, dude. Let's see. Okay, so emergency close method here uses the reduce only equals true parameter, which should bypass balance restrictions. Dual approach first tries the SDK with reduce only. The thing is the reduce only wasn't working very well. It is installed. You have to do conda activate T-flow. I'm not only going to show you how to build your own trading bot and automate your trading so you can remove emotions. I'm also going to pay for your AI so you can cancel all of your ChatGPT and Claude subscriptions. Click the link below to join the bootcamp. I will teach you how to automate your trading and pay for your AI. The link is below. The link is below. The link is below. Okay, your trading bot is now protected against this critical issue. So let's see how she fixed it. So the fix is now installed and ready to activate automatically. Here's what happens. When available balance goes negative, automatic detection, close position, detects negative balance, emergency mode, switches to force close position, reduce only. The thing is I don't think that reduce only works too well. The game is this Candlesticks Crusade. Oh, nice, dude. You making a game? Sick, bro. Working on a meme game and also product design for a business I'm working on. Nice, dude. Trying to get a USB to work between dual boot Windows and Linux. All my code is on Windows, but trying to switch to Linux. The ISP is angry and it doesn't want to work right. I don't even know how to use Linux, dude. Okay, so I have my bot right here, actually. And I'm just going to run it here and see if we can get this going. I'm going to make this take profit and stop loss super small here. Here we go. Look, I get this error though. You can see I actually get this error here. My balance available to trade is not negative, by the way. So I don't know why I even use this. But let's go ahead and try to get this going on all of the closes, because then if we get the reduce only to work, then it should theoretically work across all of them, you know? Yo, what's up, Sonri? How you doing, bro? I'm a fan of you too. Thank you. I'm a fan of you. I'm a fan of all you fans. If you're a fan, dude, I'm a fan. Linux is like Mac OS, but for Windows. Okay. Cool. I didn't know that. Now let me check your extended exchange API documentation to find the correct parameter name for reduce only. The parameter names look correct. Let me check if there's a different API. I'm not awake yet. You know what I mean. I do know what you mean. About Linus. Linus, he's a good guy. What up, Jimmy? Good to see you, dog. Jimmy's in the house. Jimmy's in the house. Muffy's in the house. Sunray's in the house. Matthias in the house. Silky is an ad, but he's in the house too. Silky and ad up there. Why they keep spamming me with these ads, bro? Perfect. Now let's test this improved fix. Try the SDK first without reduce only, since it's not supported. Try REST API, snake case. Okay. REST API. Okay. Camel case. Try market order. Okay. Okay. It just got it out. It just closed it. Perfect. I didn't tell her to run it, but oh, maybe I'm running it. No. Okay, let's see how it does here. Okay, the enhanced close method successfully closed your position using the SDK approach without the reduce only parameter that was causing issues. Here's what happened. Okay, so that's not what we want though. How can we test this, dude? How can we test this? I need to get to a negative balance. Because that's going to happen. Okay, I'm going to... No, I can't. Not withdraw. I guess I'm just going to keep... The fix will work automatically, work with a positive balance. Can we put the reduce only into all of the closed positions? And let's just work on that, because right now it's hard to get a negative balance. It doesn't happen all the time. You have to, the position has to go against you quite a lot, and you have to be in full position. So if you think it works with reduce only on there, then please go ahead and try those tests and put them in our regular closed position with the reduce only, so we can test to see to get reduce only working, you know? Kimmy, why do I not use it? Because why would I? Yeah, that's a better question, dude. Why would I? Why would I use that? Absolutely. Let's add reduce only functionality to all closing positions here. And then what I can do is I can hack this, bro. Let's get this here to very small size, like 0.1%, and I'm using super high leverage. Just for testing this, I would not use this much leverage. Okay, -1 or 0.1. Perfect, dude. Perfect, 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 dude. Life is perfect. Life is perfect, dude. Life is perfect. Perfect, perfect, perfect. Okay, I think I can kind of force this to get into a negative position a little bit easier. I just keep moving that up here.
If you want to automate your trading, I will hold your hand step by step in my bootcamp with short, concise videos in any language. So if you actually want to automate your trading, check out the link below.
Test close position. What's up, Kyler? Good to see you, bro. 777. Much love. Now let me run the test to see if reduce only functionality works properly across all methods. Oh, see? Look at that, dude. Reduce only is... Okay, now I'm negative, which is good. Interesting, the order stream place was order position still exists. It popped up and said that reduce only does not work because of a negative balance. See, they got a... This is a bug, bro. This is a bug on their end for sure. And I learned the hard way, dude. I learned the hard way, but that's okay. That's part of the game. It's part of the game. Essentially, on this exchange, let's say you have $500 on the exchange. You take a position that takes up $500. If it goes against you, it pulls from your account and it says you have negative $20. Okay, negative $20 might be like down 3%, whatever. It might hit my stop loss. And you're down your 3%, cool, another trade, whatever. Close that position. But since it went to negative balance, it doesn't let you close positions, doesn't let you open positions. You have to go to the UI in order to close it. So that's very, very bad for algo trading. Very, very bad. Interesting. Your available balance is currently positive. Yes, it's currently positive, but it just flashed negative when you put that reduce only in. So that's the thing. Maybe you can make me a script with a bunch of different reduce only tests, and then I can try it when my balance does go negative.
Says absolute perfecto.
That's a good idea, dude.
Love to.
I'm gonna get some coffee. All right, I got some coffee, Kyler. I got some coffee. Let's see here. The real problem: extended calculates order costs even for reduce only and blocks them when available
So,
is
yeah,
negative.
the 6th
This is a fundamental
of
limitation.
Wednesday.
They don't properly implement reduce only checks. I'm about to send this bitch to them. I'm about to send this bitch to them, dude. I mean, help them out, bro. This is helpful for them, so you know, that's the least I could do. You know, I'm working on it, so that makes total sense. The balance flashes negative exactly when you need to close the position. Let me create a comprehensive script with every possible reduce only variation here. Okay, perfect, dude. Perfect, perfect, perfect. Okay, so let's see here. Let's see what we got. We got something. I know that. I've created a comprehensive script. 14 different reduce onlys. Test negative reduce only.py. Okay, so let's go ahead and run that. Test. Reduce only. Okay, perfect. Okay, I want to wait for this balance to go negative. And it's negative right now. Let's run it. Negative reduce only. You can see negative here. -7.
He's good, yeah. Cool.
Failed. What's it saying on the exchange
I'm
here?
going to do this in a sort of way.
Dude, this is just broken. Keep trying, dude. Keep trying. Let's keep trying. Let's keep trying. Cool. I'm finding bugs. I'm so ahead of the curve, bro. I find bugs in people's exchanges they don't even know of, dude. That's crazy. Step on the gas with me, please, every day. You can see that all those things we tried didn't work. So go ahead and give me a new script or something to try to figure this out, dog. Thank you. You're doing great. You're doing great. You're doing great, dude. You're doing great. You're doing great. You great. You great. You great. You is great. You is great. Good morning. You are great, dude. Kyler, you're great. Muffy, you're great. You're great, Sonri. You're great, Jimmy. Let's get it. You're great. Perfect. This is exactly what we need to confirm. The comprehensive test extended blocks all orders when available balance is negative. There's no API workaround, but we're not giving up. Let me create a script that explores the only remaining possibilities. Thank you, Shorty. Thank you. You're great, dude. You're great. You're great. You're great. You're great. Let's get it. Let's get it. Let's get it. Oh, hey, what's up, guys? What a beautiful day. Another day. Another day to be alive. It's a great, great place, dude. But we're not giving up. We'll never give up. We'll never give up. We'll never, ever give up.
Can get access to
We'll
the
never
plugin you'll
give
see
up.
on the top left. Now you can see on the top left here, here's our new plugin, the actual multi-stream output thing, and of course what is actually OBS. Now won't do stuff like that, but we're gonna run anyways because it's safe. It just computer some RTM 64 installer, and we're just gonna download this like slow, and we're just gonna open this on up. Now it's probably gonna ask you don't want to run this and stuff like that, but we're gonna run anyways because it's safe. It just computers sometimes want to be safe anyways. So we're just gonna run that, click install, and then close. And now what we're gonna do is reload up OBS. Now, when we open OBS again, we're of course gonna get access to the plugin. You'll see on the top left. Now, you can see on the top left here, here's our new plugin, the actual multi-stream output thing. And of course, what it's actually going to use is use your normal stream output for streaming whatever main platform you go to. So I stream on Twitch, right? So I just put Twitch in here, right? And then of course, we're all good to go there. Now, what you wanna do is add a new actual stream source. So for example, here I have my Kick. I'm gonna delete this for the time being, just to show you guys on how to add one. So what we're gonna do is click add a new target. When we do add a new target, we're gonna of course name this whatever we want. For me, I'm gonna name this Kick. And then what we're gonna do is go get our server key and also stream key for actually Kick. So we're just gonna go to our settings. We're gonna go under stream key, and what we're gonna do is copy the URL, and we're just gonna place that URL on in here. And we're gonna do the same for the stream key, where we're gonna go in here, grab our stream key, and we're just gonna place this like in here as well. Now, once you've done that, of course, you can leave every else is the same. What is it is gonna grab your output settings and what you're actually streaming with via OBS. You can't customize this if you want to get more in depth, but honestly, I don't see the point of it, so we're just gonna click done and okay. Once that's added, you're gonna see you have now Kick added. And now you of course can add YouTube, Twitch, whatever platform you can, and then you can go from there. And of course, if you want to use your other plugin for the vertical plugin, you can use this to stream on actually TikTok, because what happens with it is that you can actually add a separate streaming platform, which is pretty cool. So yeah, not only do you have a vertical plugin now to stream with, you of course have the multi-stream with if you want to use that. I would just recommend you get the vertical plugin. We'll have a video on that, link down below if you want to check that out. That will actually show you on how to set this on up, so that way you can stream to TikTok if you do have access to a TikTok stream key. But with that though, you might be wondering now, how do I go live? What you're gonna do is pretty straightforward. You're of course gonna click start your stream here, which is gonna send the stream to actually Twitch. And then what you're gonna do is go to start stream on the Kick. And now what we can do is actually go check our Kick and Twitch. So you can see now we're live on actually Twitch, of course, and then if we go over to Kick, it's going to send that signal to Kick as well, and you can see we're now live on both platforms, and of course the audio is looping, just ignore that. But that is of course how you add a multi-stream output for OBS totally for free. If you guys did find this video helpful, make sure to smash the like button, get subscribed, because we're almost 1,000 subscribers, so it'd be very much appreciated if you hit that button, help us reach that goal. We're literally less than like 70 subscribers away, so
if you get stuck on the melody, or if you just feel like you can't get a song started, Output's co-producer is...
If you're someone that you need here, go ahead and select OK. And now we're just gonna start streaming. So we're gonna start streaming on YouTube, and then we're also gonna start streaming on Kick. If you've connected multiple platforms within your multiple, I'm gonna go ahead within one of the doc containers, and then you can adjust it with where it says go to download. Click that, and that'll take you to GitHub. From here, you're gonna see the most recent up-to-date version of the RTMP plugin. You're gonna wanna scroll down just a little bit, and you're gonna see a list of assets within this section. From here, you're gonna wanna download the correct asset pertaining to your device or your operating system. For my M1, M2 silicon-based chip Mac users, you guys are gonna wanna download the ARM64 package, and if you're on Intel, you're gonna wanna get the x86 package. In my case, I'm on a Windows computer, so I can go ahead and download the executable file right here, and then install this with literally just a click of a button. Once that's complete, you can go ahead and restart your OBS Studio, and once you bring it back up, you should see the multiple output dock somewhere within OBS. I recommend putting it somewhere within one of the dock containers, and then you can adjust it with the docks that are around it. First things first, within your normal OBS settings, hop over to the Stream tab, and within here, you're gonna wanna make sure that your primary streaming platform is selected within this section. So whether or not you're using a custom or you're using any of the options within the drop down here, make sure that service is all set up and ready to go. Now within my multiple outputs plugin, I'm gonna go ahead and add a new target. We're gonna name this Kick Stream. And then within here, we're gonna wanna add in our URL from Kick. In my creator dashboard and stream key section, this is where that Kick information is gonna be. So I'm just gonna go ahead and copy this information in. I recommend that you continue to take your video and audio encoder settings from OBS, but if you want, you can customize this to your liking if you'd like. Other than that, that's all the information that you need here. Go ahead and select OK, and now we're just gonna start streaming. So we're gonna start streaming on YouTube, and then we're also gonna start streaming on Kick. If you've connected multiple platforms within your multiple output target platform,